NASDAQ futures indicating a gain at the start of trading this morning. Take a look. Technology setting the tone for markets this morning. Look at the Dow up 53, but the NASDAQ is up 77. That's about 0.5% right now. Apple reported a double beat on earnings driven by an 8% growth in services, but it also reported a decline in sales for the third straight quarter. The stock is down about 2%. This is, of course, the most valued company, $3 trillion company. Amazon, on the other hand, is soaring this morning after a year of layoffs. The company reported better than expected numbers, even though it, too, saw a slowdown in sales at Amazon Web Services. The revenue was better than expected, and the guidance was better than expected for the third quarter. Let's take a look at Amazon stock this morning because the revenue expectations for the third quarter, $138 billion to $143 billion, ahead of the $138.3 billion expected. That's why you got a 9% rally in Amazon right now. Joining me right now is ERShares CEO Joel Schulman. Joel, great to see you. Thanks for being here. Apple is such an important company because it is the most highly valued out there. Not a lot of room for error. What is your reaction to the Apple earnings and Amazon as well?
Well, so Apple, it's not surprising. They're taking a little hit this morning. They're down about 2% pre-market. The valuations are actually very elevated. On a market multiple basis, they're about 3x, 3 times the peers. And so it's not surprising to me. I know there's a lot of focus on $3 trillion valuation. They're probably going to dip and maybe stay below for a while. On the other hand, Amazon is a great story. I mean, it's one of the best quarters they've had in years. They're up around 8.5% to 9% this morning, and it's deservedly so. I mean, they beat on the top line. They beat on SG&A. They reduced their costs. Now, it came at the expense of 26,000 workers. They reduced the costs, and the EBITDA is widened. So this is a good story right now that Amazon's way up.
Okay, Kelly, jump in.
So, I want to get your perspective, though, on Amazon, because Amazon Web Services, right, 70% of profit. We did see a slowdown. It was 12% growth, but last quarter was 16%. I believe it was the slowest since they started breaking that out since 2015. What do you think this says about where businesses are going?
Well, so this is a $1.3 trillion company. It's hard to really, keep that 12%, 16% growth for a long period of time. So even getting 12% for a $1 trillion plus company is impressive. And what I think the real story is here now, with the new CEO coming in, having reduced the cost, which is very hard for a large, in this case, a bureaucratic company already, that it's very hard to cut costs, and they've done it impressively. And they did so at the same time raising the top line. So it's very unusual for any company, let alone a $1.3 trillion company, to raise top line, reduce SG&A costs, and widen the EBITDA. So I give them hats off to Amazon for having done that, given the difficulty with so many employees that they have.
Well, we're also talking about the macro story today with the jobs numbers coming out, Joel. We've got the July jobs report out in about 2 hours, 8:30 a.m. Eastern. And economists are expecting more growth in jobs. 200,000 non-farm payrolls to be added to the economy in the month of July. The unemployment rate expected to come in at 3.6%, which would hold steady. Meanwhile, new data from the National Federation of Independent Business finds 6 in 10 small business owners reported hiring or trying to hire staff in the month of July. That's good news, Joel. What do you think?
Well, almost all the job growth has come from entrepreneurial companies, and this is an area that we study very closely. I'm a professor at Babson College, which is known for entrepreneurship, and I run a company on ERShares. So the growth is coming from small companies. It's traditionally been from these entrepreneurial companies. What's interesting is the jobs to worker ratio has actually declined. But, the economy has been resilient. We've been saying for a long time that the unemployment is going to remain low. It's about 2% below historical averages. We've got to remember we've got 4.3 million workers, baby boomers, eligible for retirement each and every year, and that's going to keep our unemployment low for many, many years. I think we've got as many as 10 to 15 million workers on the sidelines who are eligible to retire but haven't done so for a variety of reasons. So I think we're going to see low unemployment for a long time.
Yeah, John Lonsky.
Well, Joel, one of the reasons I would say why they're not retiring is because they cannot afford to retire, given this run-up by price inflation. Something that has happened in the last week that worries me, Joel, would be this sudden liftoff by Treasury bond yields. I mean, you now have the 10-year yield, not too long ago, was under 3.75%. Now it's approaching 4.2%. I think this rise in yields reminds us that if we try to grow the economy, given a very low unemployment rate, we're probably running the risk of rejuvenating inflation, of reigniting inflation. Any thoughts?
Yeah, thanks, John. So a couple of things. One, 4.2, and by the way, the 5-year, the 10-year, and the 30-year are all rising just in the last couple of days with the Fitch rating announcement, but they're still well below historical averages, and we still got to remember it's well below the 5.8% or so, 5.6, 5.8 for the short yield. So we're seeing long-term rates have come up a little bit, but they're still below where they've been, earlier this year, and it's still historically very low. I think, when you think about the unemployment and the inflation that we have, we've got to remember that the biggest driver to CPI is real estate, and it's about 30 to 40%, and that's been coming down. And as you mentioned, rising interest rates, particularly with mortgage rates being above 7% now, it's going to continue to slow things down. We're seeing the commercial side, with office buildings and other areas that's slowing down. So I think the real estate's going to keep our inflation low and continue to decline.
Yeah, it's interesting because some people are expecting a pretty significant upset in commercial real estate. Is that what you're talking about?
Yes, I think commercial real estate is going to continue to weigh in our economy, particularly in office and some of the commercial facilities which aren't opening up again after COVID. So we're going to see the real estate continue to depress. We saw it happen in China in a big way with Evergrande and what that's done to their economy. They're pushing them towards a major slowdown, and we're going to see some of that effect trickling back over in the U.S. with our real estate slowing down as well as other parts of the world like Europe and Latin America. So the real estate's going to be, I think, the big story as we look at CPI continuing to unfold in the months to come.
All right, Joel, great to see you. Thanks so much. Joel Schulman joining us.